All right, let's kick it off here. Well, thank you for everyone joining us here. It's kind of a smaller crowd than normal here. We're actually kind of meeting late my time. I'm out here on the Pacific Coast. For those that don't know me, I'm Ken. I'm one of the rocket scientists, and I get the privilege of hosting the community calls. And this week we're joined by Clouded with ETH Strategy. Clouded, good day to you.
Yeah, good to be here. Thanks for having me. Thanks for Maverick for inviting me.
Yeah, absolutely. Well, let's start off maybe a little bit here. I understand ETH Strategy is a DeFi protocol that functions as an autonomous on-chain treasury accumulation mechanism here, or I guess the equivalent would be like MicroStrategy for Ethereum, but built on chain. I wonder if you could maybe just introduce a little bit about ETH Strategy and yourself, and tell us a little bit more about it.
Yeah, definitely. So yeah, ETH strategy. I mean, the most left curve explanation is definitely MSTR, but fully on chain as a protocol. The protocolized implementation of the MicroStrategy trade is what I like to say. A little bit of background on myself. So I've been involved with the Ethereum ecosystem for many years now. I think coming up to 9 or so years. Don't even know anymore. But I've been involved with DeFi since it was kind of born. I think finance was the real thing that got me involved very deeply. And I think that DeFi still is the biggest PMF and what I passionately like to kind of contribute to and fight for and empower as much as I can in the space. Have done a lot of stuff in DeFi, but most prominently recently, I think for the last 3 years, I've tried to do a lot of research into DeFi credit. I have a thesis that credit itself, permissionless credit, is the real unlock to push DeFi further than what it's come right now. And after many years of, I guess, deep like research and trying to build primitives and fix problems around the credit sphere, and not having too much luck, banging my head against the wall, I think it was towards the end of 2024 where I took a look into MSTR and what Sailor is really doing with a couple of quant friends of mine, and kind of realized that he's actually doing some innovative stuff in the form of a new way of doing credit through the convertible notes that he's doing, and kind of like an accumulation of our years of research kicked in, and we realized real quick that basically it's a good way to kind of bring a new primitive on chain through this convertible note strategy. So we started designing a protocol around it in January 2025, so in the very beginning of this year. I wrote a white paper for ETH strategy, which was like the way a protocol would implement the convertible trade that Sailor is doing to kind of accumulate ETH behind a treasury that has an equity token that will be kind of increasing in value at a faster pace because of the accretive way that it accumulates ETH. When I published this like draft white paper, it was published on my personal blog page, and I sent it to a bunch of Ethereum ecosystem people that I know, and quickly, like I think there was about 100 people in a TG in a Telegram chat that, like, some of the bigger names in Ethereum, which I'm glad to say are also some of my friends. I think people like Sasal, Amin, Kane, I don't know, some others, and yeah, the reception was really good towards the white paper. People were saying, yeah, like Clouded, this is something you should definitely do, and this is something you should definitely pursue. And it felt like there was enough demand, or I guess like support, to kind of actually take this seriously. So, shortly after that, we started building and putting together a team and really, like, building it out, auditing it, getting market validation, kind of like doing all the BD and everything. And fast forward to, I think it's 8 months now later, we've successfully managed to raise a private placement in Strat, which is like the MSTR token, of close to 11,000 ETH. And so far, we've got a very nice high signal community of ETH bulls. And we've also actually done the next step of our protocol, which is releasing this kind of convertible arbitrage trade that Sailor has done to give value to DeFi in the form of a new product, and we've managed to get in the last 3 weeks about $2.4 million into that new product. All of that goes towards growing the ETH treasury for Strat, and the flywheel is starting to kick off. So I think that was a very long explanation. Sorry, but yeah, that's basically the gist of how we got here. I'll stop there. I won't keep going for now, if that's okay.
Yeah, no, that was perfect. I'd like to explore this a little bit more in detail. But before I ask the next question here, we do have a POAP for those that are listening here live. Let me give everybody that POAP code. That POAP code will go active here in about a minute at the bottom of the hour, 30 minutes past the hour here. And today's POAP secret word is rETH dash strategy. So instead of ETH strategy, it's rETH dash strategy. And I hear my alarm going off, so the POAP code should be active. You should be able to claim it now. But Clouded, let me ask you a thing here, because I'm certainly familiar with MicroStrategy here, and kind of the process that they've been going through, and then some of the other kind of corollaries to it with ETH and so forth here. But help me understand it. Like, maybe walk me through the user journey. How would somebody actually get started with ETH strategy? What does one do to kind of start that process?
Yeah, definitely. So, it's very much similar to the DATs for now, as it stands. The main thing that you would do is you would kind of get exposure to Strat, which is the MSTR token, or the SBET token of the protocol. And really, like, holding Strat can be seen as just basically like another way of getting ETH exposure. And we're trying to work very hard to make it a better way of getting ETH exposure. I say better because ideally, if you're bullish on ETH, like I think a lot of us on this call are, like myself included, what you want is you want to increase your ETH exposure as much as possible over time, right? And usually what people do is they go and they stake their ETH, and that gives them very risk adjusted exposure to Ethereum's upside, with a good yield of, like, 2 to 3%. So your ETH is actually compounding over time. You can also lend that ETH in DeFi. You can lend it out in Aave or in other platforms, or LP it, which is also another form of lending. You're just giving it to people to trade and use. And that also gives you some yield. But that's really about it. People love to preach that ETH is a productive asset, but when you really look at DeFi, like, at its core, there's two things you can do. You can either stake it or you can lend it. And I classify LPing as kind of lending, because you are borrowing to the market to use. And you get back yield and fees. And that's about it right now. So as an ETH bull, we hunted in a different direction, which is the direction that kind of Saylor unlocked, which is capital accretive markets. Accretive dilution of an asset is going to outperform kind of any sort of yield or fees that you will accumulate on the underlying. And so we wanted to replicate that. And the idea behind Strat is, over time, so over like a 4-year horizon, like a full cycle or 2 cycles, holding Strat will get you much more asymmetric upside exposure to Ethereum than kind of like staking ETH per se. That's essentially all you can do right now, is hold Strat. But in the future, obviously, because we are a DeFi protocol, there's going to be kind of a lot more utility behind the token, things that TradFi can't do. So, you will never be able to kind of do some cool, financial games with your MSTR or your SBET. But I don't want to leak too much, but there's a very good chance that, because ETH strategy is very native, that you will be able to do a lot of stuff with Strat. So I think that's the idea for now. There is one other side to the protocol. So the entire way that Strat kind of gets its accretive dilution, its leverage on ETH per se, like its yield on steroids, if you will, is by the convertible strategy. And this gives another unique product to DeFi. So on the other side of the trade, there's people that have USD, and they're happy to lend the USD to the protocol and get very high yields in return. So if you're also on the other side of this, maybe you have enough ETH exposure, or you just started a family and you want to settle down with your risk a bit, and you don't want to take the strat side of the bet. You don't want leveraged ETH exposure without liquidation risk. You just want to have high yielding stables. There's also the other side to our protocol where you can lend your stables. You can bond your stables to ETH Strategy and get back a very attractive yield from the volatility of ETH. The trade is basically a volatility swap in the middle there, and right now that's yielding quite well. It's actually well over 40-50% per annum, but it is early days. We expect that yield to kind of settle down around the 30% range. Again, I'll just stop here, but yeah, I'll leave it at that for now, and if there's any clarifications, I'll get into more detail.
Yeah, maybe you can. And apologize here. This is a kind of a new DeFi strategy for me here, but so it seems like if I'm a holder of maybe two things, if I hold what ETH, or like if I want to buy Strat, what do I buy it with? Do I buy it with USDC? Do I buy it with a stable coin? Do I buy it with ETH? What do I actually purchase it with, or does it not matter?
You can yeah, it doesn't matter. It's in an LP on chain, so just like you buy any other token, you can buy Strat.
Okay. And then if I have, and I guess the ideal is that if I buy Strat, what it takes the ETH and then it creates a looping strategy in the back end. Is that how it gets its additional gain on yield? Is that it borrows against it and then buys more ETH, and borrows against it and then buys more ETH?
So no, actually, the unique thing about Strat is that it gets its leverage in a non-liquidatable way. That would be the obvious way of getting leverage on your ETH, would be to kind of borrow, loop it and borrow ETH and chuck it on top. But obviously, we all know that ETH is quite volatile, and over a long time frame, there's going to be these moments where the market decides to fuck everybody, and you would get liquidated if a protocol kind of had this massive leverage position. So the way that ETH Strategy gets its leverage, the way that yield really comes to Strat is when you basically buy Strat, the ETH goes into the treasury. And basically, what the treasury is able to do with this equity, like let's say we start with a bunch of ETH as equity, there's no debt right now. It issues, it takes on loans from these USD lenders in the form of a 4-year bond. So we actually issue out bonds. The protocol issues out bonds. Now, unlike a traditional bond, where like a treasury bill or a corporate bond, where you go and lend your money to the government, or you lend your money to the company, and they guarantee like an interest rate and then your principal back at the expiry of the bond. Our bonds are what we call convertible bonds. So instead of paying an interest rate to the USD lenders for their debt, what we pay them is we pay them an option to convert their principal into equity at the expiry of the bond. The bond's duration is 4 years. Now, why is this important? Because if you're lending to someone that takes that money to go and buy ETH, that's quite a risky loan. So you want to get a very high interest rate in return, especially if your bond is a 4-year term, and we don't want to pay very high funding rates. So what we tell the person is, if our bet pays off, what we'll give you an option to convert your debt. Like let's say you lend $100,000, instead of getting $100,000 back plus any interest that would have been owed, you can choose to get your $100,000 back in the form of Strat at the strike price that you lent it to us. So if you lent it to us today and ETH is $4,000, we took that money, we bought ETH, and then in 4 years' time, when your bond expires, ETH is $10,000. Well, you would rationally not want your $100,000 back plus like any implied interest, which is 0% on our bonds. But like, even if there was an interest rate, let's say you get like 120, 130K, right? You wouldn't want that back because the price appreciation of ETH has far outperformed that. So what you would choose to do is you would actually get $100,000 worth of Strat 4 years ago at the time that you gave the bond at the expiry, which, because ETH has gone up so much, like ETH has more than doubled, you would likely, that Strat would likely be worth more than $200,000 worth at the time of your expiry of their bond that you convert to. So it gives the lender upside exposure on the strategy. It gives them upside exposure to ETH, but crucially with downside protection. So if ETH doesn't perform well, right? If at the end of the 4 years it goes from 4K to 3K, you want your $100,000 back, and that's when you can actually come and claim that back with the bond. And basically, that is the financial engineering of how we take on debt. And the reason why people will give the loan is firstly because they want upside exposure to ETH with downside protection, but secondly because there's a second order effect here where the option that we give them instead of interest, and this is getting into options land, which might be a bit confusing, but the option that we give them is actually inherently valuable. And what you can do with options is you can trade options, right? And our option, because an option on Strat is basically an option on ETH, it's fully backed by ETH. You can treat it kind of like a call option on ETH. And what that allows you to do is now you've basically received a free call option on ETH, and you can actually go and use this option to conduct another sort of trade in the meantime, which is called a volatility trade. It's called gamma scalping. When you trade options, you trade volatility. So if you hold a long-term call option on ETH, you can actually go and sell short-term call options on ETH every week or month, and you can pocket those premiums. And over the time of this option that you have, which is a 4-year option because your bond is 4 years, you will probably be eking out like 20, 30, 40% per annum on your option strategy alone. So even regardless of where ETH goes, if you're downside protected or not, people will bond their USD because they're inherently buying that option for the cost of capital, right? Because you don't get interest rates. So if you could get like 10% somewhere else, you're paying like an implied 10% rate to buy that option and to go and make 30, 40% on the option strategy itself. And this is actually what Saylor did. So this was the real inspiration for us, was that when Saylor started his MSTR trade, no one would lend him money to go buy Bitcoin. It was seen as very risky, right? It's not like today, like SBET and Bitmine, they don't have to do any of this because the market's irrational. They just launch and there's so much hype that people buy their tickers and they're able to go and just dump equity into people's heads and buy more ETH. There's no debt. But Saylor couldn't do this. There was no irrational bullishness at the time when he launched. So he had to come up with a way to give value to the market so he could get what he wanted. And the value that he gave was he actually started, issuing these convertible notes that have embedded options on MSTR, and he mispriced these options. He gave them out for essentially very cheap. We give them out for free in ETH Strategy because we're even more of a risky startup, but Saylor priced them very cheaply in his converts. And Wall Street realized very quickly that they can buy these convertible notes, they can strip it out, so they separate the option from the debt component, and they can use the option to do this trade that I said. So they can actually either short the MSTR stock and rebalance this, or sell calls against the call that they hold. And Wall Street started doing this and started yielding very high. So they started making like 10, 15% per annum. And that's why Saylor initially was able to sell like $8 billion of converts. And everyone was like, who is filling out these convertible tranches? And they didn't know that it was actually Wall Street, because they were like taking this and they didn't give a shit where Bitcoin goes or what Saylor does with their money. They were happy because for the first time ever in TradFi, they could trade the volatility of Bitcoin. They could make yield off of pure volatility, no delta exposure, so no price exposure up or down. And that's what Wall Street loves. They love eking out yield in other dimensions than just like price go up. So that is what we actually productized with our converts on chains. Like that's the core of the ETH strategy protocol. And once again, I think I talked a bit too much, so I'm just going to leave it here. If you want to have any clarifications, let me know.
No, thank you. Actually, that was very, very educational. It's probably the clearest explanation I've heard yet, and it kind of excites me to do a deeper dive on this thing. So let me just ask if I'm tracking here. So I guess there's two ways to go in with ETH strategy, right? I could either buy the Strat token, and that would be basically equivalent to say holding ETH, right? It would likely have similar performance to ETH, right? Maybe a little bit gain in the yield performance, right? Or the other way is I could lend I could lend dollars in that kind of lending program and that convertible bond program. Is that correct? And then what do I get if I go in through the bond program? What do I get, a token to show my
Yeah,
bond position, or an NFT or something?
so that is correct. There is two sides to the protocol. So yes, you can buy strat, and essentially, like it's up to the market how it trades. It should theoretically trade a little bit more volatile than ETH, but it also depends on liquidity. So full transparency, like we're still quite early as a protocol. So we don't have like extremely deep liquidity, and strat kind of like doesn't trade as it's supposed to yet. But we believe that, as we keep moving forward, it's going to become more liquid, and the market is going to understand the dynamics more, and it will start trading accordingly. So just keep that in mind too. But yeah, strat should be seen as just like, the ideal candidate for strat, in my opinion, is someone that holds ETH as a very long-term portfolio. Like, I have a portion of my net worth in ETH that I just want to leave in ETH forever. Like, I don't really care, right? Like, it's just, it's my, like, actual savings account, if you will. I think the perfect candidate is when you have that type of exposure to ETH, putting a small portion of that ETH into strat is like the ideal form of thinking about it. It's like, being happy with risking a small portion of your ETH stack over a long period of time for the potential of significantly outperforming staked ETH over like a 4 to 8 year period, right? So that's the way to think about it. And we're targeting kind of giving you more than 10% yield on strat, like from the underlying annually. So that would be like much better than kind of staked ETH for a sec. And now, yes, the other side is the USD side. So if again you're not too interested in getting this ETH exposure or whatnot, then you can actually use USD and kind of play with the bonding. Now, the bonding gets a little bit more complicated because the permissionless bonding, as we like to internally call it, which is the pure converts that you can buy from our protocol, are not live yet. We haven't actually launched them because it's the market, like from our market research and validation, there's not enough demand or understanding on that permissionless bonding side to go and just buy the convert from the treasury. So they're not actually live. What we have done is we've released a vault that productizes, that kind of automates this volatility trade that we're talking about. So this vault is called ESPN. It's called ETH Strategy Perpetual Note. And it's live right now. And you can go and mint ESPN tokens. So you can mint these vault tokens. And what that does is when you mint it with USD, the vault takes your USD, it gives you the vault token. The vault then takes the USD and bonds it with ETH Strategy and receives this option. And we have a partnership with Derive, which is an options platform where the vault automatically goes on Derive and holds our strat option as collateral and starts selling weekly call options on ETH on Derive and pocketing those premiums and bringing those back into the vault. So this vault is the thing that's been live for 3 weeks. And in the first week, it was doing a 66% per annum annualized yield. In the second week, it hit 56% per annum annualized yield. And in the third week, we're entering it now. It's expected to hit actually closer to 80% annualized yield because it's really dependent on how volatile ETH is through the week. Because again, this is a volatility trade. So this week, ETH was actually playing according to being a good boy and being actually a bit volatile. So the yields have gone up, and that's how you can get exposure in the USD side. Is actually minting our vault token, and this vault token is kind of like a yield bearing vault token where that yield kind of like keeps compounding on itself week after week after week. So that is the bonding side.
Oh, interesting. And yeah, it's funny. And doing a little show prep, I came across the ESPN token, and I thought maybe I wasn't understanding it again because I thought, what is that, a sports betting token? But no, you said it actually stood for what?
It stands for ETH Strategy Perpetual Note. Uh, so yeah, so it's a bit of a meme. We decided to go with ESPN because we can meme it. Like I even made some tweets about like, once you get one show of ESPN, like you want floor seats for the Lakers. Like this is like, it's pretty funny, but I don't know. It's a little cute, but yeah.
Yeah, perfect. And then let me ask one more question, and then I'll certainly invite others that are here in the chit chat channel to ask questions as well too. But now, so So now tell me, what is there, or is there any relationship with Rocket Pool or rETH? Are there any plans for integration or acceptance of the rETH token?
Yeah, definitely. So, as we're a fully DeFi on-chain protocol, and we have a ETH treasury now of close to 12,300 ETH. Obviously, ETH, unlike Bitcoin, is a very productive asset, so we can stake it. One staking provider that we admire and really like is Rocket Pool, because all of our team are kind of decentralization maxis. The only LST I personally have ever used up until very recently for other reasons was actually Rocket Pool. So I was one of the earlier rETH users myself. And yeah, so the relationship with Rocket Pool is that a good chunk of our 12,000 ETH, so about 512 ETH, is allocated to rETH. We're happy to allocate that because what we want to do is we want to support all the really great DeFi protocols on Ethereum. And of course, Rocket Pool is one of those. And as our treasury grows, there's a good chance that, we also increase these allocations accordingly.
Yeah, well, that's excellent to hear. As I'm sure you're aware, we've got a planned protocol upgrade in January of Saturn, and it should create lots of staking capacity for rETH. But even right now, we've got plenty of staking capacity. So that's excellent news to hear that your protocol might be considering rETH as one of its LST investments in that project.
Oh, we already have the rETH. We've already contributed to Rocket Pool and hold it on our balance sheet. So yeah, it's great.
Excellent, excellent. Well, let me pause here just for a second and see if anybody has questions for you. Just feel free to unmute and ask the questions if anyone has them, or post them in the trading channel if you like. Well, I let people kind of think of any questions they might have. So, what's the next step? You said right now on the kind of the bonding, the lending bonding side, you're just using a vault and you're using a kind of an asset manager to make those decisions on the gamma strategy trade. What's next, or what's on the roadmap now for ETH Strategy? Do you intend to always use a vault and a management protocol on that end, or will it be more kind of self-sovereign investment on that side?
Yeah. So to give context, our initial design with the permissionless bonding, like the pure converts from the treasury, it was a fully autonomous protocol. It would have been immutable and baked from day one. And we did thorough testing on that and also audits. The reason why we didn't go to market with that was because when we started trying to sell it and started trying to get people to play the bonding game, it was a bit too hard at this stage. So we thought that if we go to market with the pure bonds, we would not have the kind of traction or flywheel effect that we wanted. So and that was from a lot of market validation. I think I've done a lot of BD over the last couple months and spoken to hundreds of people, whales, crypto funds, etc. And ultimately that was the decision because of like the reception that we had. So this vault is not as autonomous as that original design. So that's admittedly so. But our team is very much still autonomous maxis, decentralization maxis. So the plan is to kind of figure out the market-based actions that will be need to be baked into the vault that kind of like allow it to be much more autonomous and scale on its own over time. And kind of like automate that option strategy. So for now, it's actually our own team that manage the option strategy with on Derive, and it's okay for now because we also want to keep a close eye on everything, make sure it works. Like we're still in week 3, but over the couple months, as we get more TVL and we kind of like discover more information about the strategy and the trade and whatnot, definitely the thing that's on the forefront of our minds, of my quants and myself and our engineers, is how to kind of create because in DeFi, it's all about creating kind of the market conditions so that the market comes and closes arbs and pushes the product in the direction you want it to go. So we are very much in the path of creating the market-based actions needed on the vault to make sure that it can stand alone and be completely autonomous and still be a very high-yielding vault. And that is the strategy on the ESPN side. On the Strat side, obviously, Strat is actually right now currently benefiting heavily from both our staked treasury. I think in the last month, our treasury made $83,000 in revenue, which was about 18 ETH. No, it's not much compared to a 12,000 ETH treasury, but basically, like it's still EPS growth, so it's still ETH per strat growth, which is that yield that we're talking about. And also the vault has given about another 15 ETH in the last 3 weeks to strat, and we've also committed a few at the market issuances in the LP that have brought in another 150 ETH. So it's slowly ticking up the ETH per strat. And this is with no strat dilution so far. So every strat holder is getting higher, yield right now in the form of their NAV, like their actual ETH backing strat, and that's the idea over a long period of time. And also on the near roadmap is that basically strat itself will start having more utility too. So up until now, all you can do is hold strat as a proxy for non-liquidatable leveraged ETH. But in the near future, in the next month or two, there's actually going to be stuff you can do with your Strat token too that will further boost the liquidity, TVL, and EPS of Strat. So that's the kind of gist of the next couple steps is scale ESPN and make it more autonomous, and also give utility to Strat. So those are the two paths that we're going ahead. And as we do this, the underlying mechanics will still make the strat token have more ETH per strat. So that's the real target that we target is EPS growth, and we're slowly getting it. And as we start getting more and more EPS, we believe that the market will start realizing that strat is this kind of new terminal asset on ETH that you can kind of rely on over a longer period of time.
Yeah, very, very fascinating to kind of listen to this and kind of begin to conceptualize and understand it a little bit more. Tell me about one thing that maybe you mentioned very quickly here. You talked about kind of at the the ATM, the at the market release or generation of strat tokens. So as the protocol begins to earn more ETH, how do you actually decide between let's say returning that as part of the valuation of the strat token or issuing new token? How do you make that decision about issuing new shares or adding more value to the existing shares?
It depends on the path that the ETH comes in. So, for example, there's like 3 main paths that ETH comes into Treasury, as it stands for now. The first one is the staking yield on our Treasury. That is always going to be non-dilutive. So as our Treasury stands and makes ETH every month, there's going to be no strat issued on that. That only benefits strat holders in a completely non-dilutive way. Then you have the bonding. So the pure bonding that we haven't released, the permissionless bonding, that will be accretive dilutive, which means strat will be minted if the bonders decide to convert at the expiries, but that is not currently released. ESPN, which is the productization of just the pure gamma trade, is actually non-dilutive too, because the people that go into the vault do not have the option to convert to strat. They only have the ability to get exposure to the trade that happens. So there's no conversion to strat in the vault for now, and so that's also non-dilutive. The only other one that brings ETH in is if ESPN and bonding is what we call debt issuance, then we can also accrue ETH through equity issuance, which is what basically SBET and Bitmine do. All they do is equity issuance, right? They print more shares and they sell them for dollars and then they buy ETH. We can theoretically also do this as a protocol. The decision would be done by the team for now at this stage. And we would only do it if there is sufficient liquidity conditions where we can mint strat and sell it at a premium to acquire more ETH, which is which is dilutive, but it's accretive dilutive, because if we are selling Strat at a premium, let's say like Strat is trading at 2x the EPS, the actual backing of ETH. So like if Strat is like $1 and it's fully backed, but in the market Strat is trading at like $2, for example, we could mint Strat and sell it at $2, and we would be getting $2 of ETH for like every $1 of Strat, and that's what we call accretive dilution. We don't do this a lot. We did it at the very beginning because we had a lot of volume during launch, and that's why we have that the 150 ETH from that initial at the market. But we won't be doing this for the foreseeable future, because we are focused on bootstrapping the liquidity in the LP. And we don't want to just constantly be taking that liquidity out. We want to deepen this for people to trade Strat. So we only took advantage of this because we were sniped on launch, and we were able to take some of this away from the snipers. But other than that, we don't plan on doing equity issuances until further down the track, when Strat is a very liquid token. And that's the idea behind it.
Oh, absolutely fascinating. Clouded, are there any things that we haven't had a chance yet to cover or touch on? I know the protocol can go in great many details here, but anything that you think is important for the Rocket Pool community to know that we haven't had a chance to discuss?
I think it was actually quite comprehensive. I really appreciate, everyone listening and taking the time. I think it is quite a complex protocol, to be honest. Like as soon as you get options involved or these new financial mechanics like accretive dilution, it becomes very complicated to understand. So I really appreciate allowing me the time to explain these concepts, because these are usually the hurdles that we're not able to communicate too much. And once people kind of understand the underlying financial engineering, they kind of wrap their heads around what we're trying to achieve here. So I really appreciate the time. But I think that covered all of it. That's a very comprehensive insight on our protocol and kind of like where we aim to go from here. I would love if anyone has any questions or just inputs or takes or concerns, even if they want to come off mute and let me know. That would also be appreciated, but no pressure or stress if there's nothing.
Yeah, I see, Nick, you came off mute. Go ahead.
Nothing for this call, just hoping to connect with Clouded at some point offline.
Yeah, perfect. We could forward. It's a good question, Clouded. If folks want to learn more about the ETH strategy here, or get in touch with you, what are the best ways for them to learn more and find the protocol?
Yeah, definitely. It's a great question. So I think jump into our public Telegram group. You can find it on our official website. So our website is ethstrat.xyz. It's also on our Twitter. The safest way to go to it is probably go to my Twitter account, go to my bio, click on the ETH Strategy account. It's the one with the gold tick, and you can go to the website through there, and you can find our Telegram group. The Telegram group is public. Come in, ask questions. Our team is there. I'm there. It's awesome to ask there. Also, if you want to do some homework of your own, we have Git books on our website. So we have community documentation. They're quite good. They're not perfect. I always scream at my team that we need to be better on docs, but they're actually quite good. And the only other way is we also have a blog, which you can also find on our website, where there is articles on kind of these concepts that I went through, like how ESPN works, how kind of like, the launch of our ETH strategy went, this and that. So if you want to read those articles, that's also educational. But yeah, basically the articles, the Git books, and jump into the public TG. That's probably the best way to get more exposure to ETH strategy.
Excellent. Well, Clouded, it's been an absolute to me, especially here. I think this is, as I said before, probably the best understanding I've heard of how one of these ETH strategy protocols work, and it certainly, I think, inspired me to learn a little bit more about this and try to understand the mechanisms behind it. So, thank you very much for coming and explaining it to us all here on the call today.
Yeah, no, thank you for having me again. It was really appreciated.
We still might have Mav here just for a second here, who's joining us from EdCon here in Japan. But Mav, I guess we might have a couple of things lined up for next week. Anything you want to mention to the group before we sign off?
Yeah, just a quick one. Thanks, Ken. We do have the next community call lined up as an event in Discord there. So we'll be back on Twitter with a Twitter space, and we'll have Langers along to share an update on where the protocol's at, especially regarding the Saturn upgrade and the audits of that, and the new proposed launch date. So yeah, come along. We'll obviously have a recording available as well. We have had to do a little bit of a shuffle for next week. We did have a couple guests lined up. So the good news is that we'll have a couple more interesting guests ready to go back to back after the Langers special early next week.
All right, thanks, Mav. Yeah, I'm looking forward. It's been lots of happening in the Rocket Pool area, and so it'd be great to have Langers on. And I'm looking forward to the future special guests you have lined up. And Clouded, once again, absolute pleasure having you on today's call, and for everyone else joining us here and kind of the late hours here in the States, thank you. And for everyone listening to this on the recording tomorrow and the next days after, good day to y'all.